Today, the programmable finance trap. Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest post covering finance and problem news with a distinctively Australian flavour. As I reported earlier in the week, a Senate inquiry has recommended that the Treasury should lead a policy review of the viability of a retail central bank digital currency in Australia. This is something the Reserve Bank of Australia has been reluctant to entertain, given it could increase the likelihood of a run on commercial bank deposits in a crisis, and in fact, the RBA has been focused on commercial-orientated CBDC pilots. But the Senate committee has asked Treasury to study the case for creating a retail central bank digital currency to compete with private currencies being created by tech companies. But I want to ask today, what are we really getting into here? Well, back in June, the Bank of England called on ministers to decide whether a central bank digital currency should be programmable, ultimately giving the issuer control over how it is spent by the recipient. Tom Mutton, a director at the Bank of England, said during a conference that programming could become a key feature of any future central bank digital currency, in which the money could be programmed to be released only when certain things happened. He said you could introduce programmability. What happens if one of the participants in a transaction puts a restriction on, for example, future use of the money? There could be some socially beneficial outcomes from that, preventing activity which is seen to be socially harmful in some way, but at the same time, it could be a restriction on people's freedoms. And he warned that the government would be required to intervene and make the final decision. Mr. Mutton said that is a really delicate debate that needs to be had. It is not something we can settle ourselves. That is for the government to lead on. A digital currency could make payments faster, cheaper and safer, but also opens up new technological possibilities, including programming effectively allowing a party in a transaction, such as the state or an employer, to control how the money is spent by the recipient. One potential use could be to control benefit payments, said Sandra Rowe, Chief Executive of the Global Blockchain Business Council. She compared a programmed digital currency to the US system of paying benefits in vouchers, as it could have a similar goal of restricting the recipient to buying only essentials such as food with the money. Earlier this month, Sir John Cunliffe, a deputy governor at the bank, said digital currencies could be programmed for commercial or social purposes, even down to the way children spend their pocket money. He told Sky News, you could think of smart contracts in which the money would be programmed to be released only if something happened. You could think of giving your children pocket money, but programming the money so that it couldn't be used for sweets. There is a whole range of things that money could do, programmable money, which we cannot do with the current technology. Now, a Treasury spokesman said programmability is a potential feature of a central bank digital currency. The task force is coordinating the exploration of a potential CBDC, and no decisions have been taken on whether to introduce a CBDC in the UK or indeed its design. But in fact, hardly anyone has commented on the recent initiatives here in Australia to direct spending following the COVID restrictions, with cheap air flights and accommodation and eating out vouchers, like the New South Wales Dine and Discover vouchers. You'll find the vouchers under the vouchers section of the Service New South Wales app within an hour, they said. You'll also receive an email from Service New South Wales with the vouchers available to download and print. Find a particular business, log in to the Service New South Wales app on your mobile device, select vouchers, select the valid voucher you wish to use, present the voucher QR code for the business to scan at payment. Your device will show the voucher as being used, and if you don't have a mobile device, you may use a printed voucher or voucher code. Both printed and digital options can be accepted by participating businesses. And vouchers cannot be redeemed for cash used for alcohol, tobacco, gambling, or online orders. Now, of course, the Australian government already has two separate cards designed to restrict how income support recipients can spend their payments, the BasicsCard and the Cashless Debit Card. While both schemes rely on cards provided by payment company Indue, they work in different ways. The biggest differences are who can accept the card. The BasicsCard can only be used at merchants that the Department of Human Services has approved. The Cashless Debit Card can be used at any merchant the department has not blocked, provided he is able to accept Visa debit. And all merchants who accept basic cards must sign an agreement not to process transactions for excluded goods, such as alcohol or tobacco, and most merchants who accept the cashless debit card have no agreement with either the department or the card provider. Both cards prevent income support recipients from withdrawing cash. Income support recipients receive part of their payment on their card, with the remainder transferred to their bank account in the normal way. And the BasicsCard was introduced to support the government's income management initiatives. Various forms of income management operate in locations around Australia, including the Northern Territory, Cape York, the Kimberley, Perth, Playford, Shepparton, Bankston, Logan, Rockhampton, a number of remote Indigenous communities. The BasicsCard is a pin-protected magnetic stripe card that allows income support recipients to spend their payments at approved businesses. The card works on the FPOS system. Cardholders cannot use the card to withdraw cash from ATM machines or FPOS terminals, or to buy alcohol, tobacco, pornography, or gambling products. Only some retailers and service providers are approved to accept the BasicsCard. To get approved, a business must agree to accept a list of obligations that include not allowing people to use the card to buy excluded goods, gift cards, or cash. Now, a common complaint from cardholders in some income management trial sites is that many retailers and service providers do not accept the BasicsCard. For example, Aldi, Bunnings, Officeworks, and some government agencies. The cashless debit card was introduced in response to a recommendation by the Forest Review of Indigenous Jobs and Training. The review argued that the BasicsCard had been an effective tool, but that it was very expensive to deliver and unaffordable on a large scale. The cashless debit card is a Visa debit card. It works the same way as a normal bank-issued debit card, except that cardholders cannot use it to withdraw cash and cannot use it at blocked merchants such as bottle shops. While the BasicsCard will only work at retailers who have been approved by the Department of Human Services, the cashless debit card will work at any merchant that has not been blocked. The card provider, Indue, blocks merchants using a merchant category code that identifies merchants by the kinds of goods or services they sell. And merchants are able to accept the card unless Indue has blocked the category they belong to. So my point is that already Australian governments are willing to control and direct spending at their will. Think of how much more power the application of a central bank digital currency would empower this. Analyst Martin Armstrong sees an ability to track all transactions as a mouth-watering prospect for government taxation as well. But they could be actually looking to go a step further by deciding what consumers can spend their money on. He says the European Central Bank is working on a scheme to launch digital euro central bank money as soon as possible. Many economists praise the project as an innovation, as an important indispensable step to an increasingly digitalised world. To be very clear, the path to digital currency is also one to total surveillance by a state regime that will accelerate considerably in this world, where they can pick your face out of a crowd of 1,000. Anyone who thinks a digital euro is somehow better because it is not fiat money, well, it's simply fiat money on steroids, he said, and the ECB will not surrender its monopoly of euro production. However, what is being talked about behind the curtain is that a digital euro can either be account-based, meaning you will keep it at an account held by the ECB directly, or it can be token-based, where banks receive a token that can be transferred from smartphone to smartphone via an app. The ECB says that digital euro is a complement to cash and bank balances. Now in the US, Secretary Yellen is focusing on the domestic good of a digital dollar. I think it makes sense for central banks to be looking at it, she said some months ago. I gather that people at the Federal Reserve Bank of Boston are working with researchers at MIT to study the properties of it. We do have a problem with financial inclusion. Too many Americans really don't have access to easy payment schemes and bank accounts. This is something that a digital dollar, a central bank digital currency, could help with. I think it could result in faster, safer, and cheaper payments. And in congressional testimony a day later, Fed Chair Powell also broke new ground, calling the digital dollar a high-priority project for us. And he added, "We are committed to solving the technology problems and consulting very broadly with the public and very transparently with all interested constituencies whether we should do this." And by the way, Martin Armstrong also commented that governments could be allowing Bitcoin to thrive before releasing their own central bank digital currencies. This is clearly evident in China, where the country has taken a tougher approach the closer it gets to releasing a digital yuan. In fact, since 2014, the PBOC has been spearheading Beijing's development of a digital yuan. Beginning in late 2019, the Chinese central bank began conducting trials across multiple cities and provinces across the country. By this June, the digital yuan had been used in over 1.23 million scenarios, with total transaction volumes above $5 billion and rising. And preparations are underway for the digital yuan to make a global debut at the Beijing Winter Olympics in early 2022. The speculation is that Chinese organisers might require that all attendees and athletes download an app that would ensure all their payments at the games for hotels, tickets, food, souvenirs and more are conducted in its new digital currency. The digital yuan is distributed by the PBOC to consumers through a wallet app and operated by 6 major commercial banks. Like the physical yuan, the digital yuan is legal tender, and it is meant to coexist with paper cash. The PBOC's centralised control of the digital yuan distinguishes it from a cryptocurrency, which is typically not issued by a central authority and poses a threat to Beijing's centralised control over the economy. And so that explains the recent efforts by Beijing to crack down on cryptocurrencies as paving the way for the digital yuan to become one of the only viable digital options in China, if not the only one. Recent statements by Chinese officials and the release of a white paper in July by the PBOC have emphasised that the immediate focus of the digital yuan is inward leaning. It's designed mainly for domestic retail payments at present. The digital yuan rollout aligns with Beijing's priority of bolstering domestic financial security, affording the state greater capacity to oversee financial flows and halt the disorderly expansion of capital. At present, the digital yuan is designed to make a big impact in the domestic retail payment space, nothing beyond that. And while it could be employed for cross-border payments in the future, scaling up will be difficult without existing networks of other central bank-backed digital currencies to plug into. Fan Yefei, Deputy Governor of the PBOC, said last year that there is a pressing need to digitalise cash and coin, as producing and storing these currently is expensive. In an article in the state-backed publication, Fan said cash and coins are not easy to use, they're easy to counterfeit, and because of their anonymity, could be used for illicit purposes. The PBOC sees a number of other benefits to a digital yuan. In a separate article, Fan outlined how a CBDC could make payments more efficient and improve the transmission of monetary policy, and he also argues that a digital yuan could help with financial stability through a system of controllable anonymity. This is where the payments would be anonymous to some degree, but data analysis tools could help the central bank catch illegal activities. Another reason behind the PBOC's efforts could be to increase competition in the payment space and to reduce systemic risk. China's digital payments arena is dominated by Alipay, which is run by Alibaba affiliate Ant Group, as well as WeChat Pay, run by internet giant Tencent. The existing system is owned by private companies. Should Alipay or WeChat go bankrupt, which is extremely unlikely, by the way, it creates systemic risk. The biggest reason for the PBOC to do this is to level the playing field. Another reason is maybe create a new payment platform system that will increase efficiency. There are two aspects to the question: the distribution and then eventually how it will be spent. Distribution will be conducted via a so-called two-tier system. That means the PBOC will distribute the digital yuan to commercial banks, and the commercial banks will be responsible for getting the currency into the hands of consumers. This could include services to allow consumers to exchange their coins and cash for digital yuan. China has already given away millions of dollars worth of digital currency in real-world trials in a number of cities, including Shenzhen, Chengdu, and Shizhou. Those involve the local government handing out a certain amount of yuan via a lottery, and users usually have to download a separate app to receive the currency. JD.com, one of China's biggest e-commerce players, was involved in the trial and allowed customers to purchase items with a digital yuan. At this point, it's unclear how users might actually hold and spend digital yuan when it's rolled out nationwide. The most popular form of mobile payment in China relies on so-called quick response or QR codes, and users can display this barcode on their Alipay or WeChat app in a store, and the merchant will scan it. Now, it's likely commercial banks could integrate similar functionality into their apps, and that Alipay and WeChat Pay could have a section of their apps dedicated to digital yuan, and meanwhile smartphone makers could also create digital yuan wallets for their devices. It'll be interesting to see how phone companies seize the opportunity to become payments players in the market. The PBOC's fan also said that commercial banks already have the infrastructure to distribute the digital yuan, and it's better that they do it rather than the central bank. To build a separate system will be a tremendous waste of such existing resources, he said. In some regard, it's designed to increase competition with Alipay and WeChat Pay, but not to totally replace them. The way I see it is a digital yuan is not a direct competitor to Alipay or WeChat Pay, but a new platform that allows other players to come in and compete with WeChat and Alipay, Trivium China's Bayo said. Those could be commercial banks or other payment companies. The PBOC's fan also said that the proposed two-tier model could help to avert disintermediation in the financial sector because the central bank will not be competing with the commercial banks. Now, all of this, of course, is different from Bitcoin, which is a so-called decentralized cryptocurrency. That means it's not controlled by any central authority, like a central bank, unlike the digital yuan, which will be issued by the PBOC. And Bitcoin is also built on the technology known as blockchain. It's unclear at this point what kind of technical makeup the digital yuan will have. Proponents of Bitcoin also tout the anonymity of the digital currency. The PBOC's fans said the digital yuan would have controllable anonymity. That would involve those operating digital yuan wallets to disclose transactions to the PBOC as the sole third party, and users would have a loose coupling of accounts, which means that their current bank account may not necessarily be closely linked to the digital yuan account. It could be based on a phone number or other ID. The PBOC says agencies operating digital yuan services would submit transaction data to the central bank via a synchronous transmission on a timely basis. That will allow the PBOC to keep track of necessary data in order to track down money laundering and criminal offences. Now, some commentators have raised concerns that the digital yuan could be used to increase surveillance on citizens, which suggests we should join the dots between central bank digital currencies, digital identity, and social scores. Despite the creepiness of the system, Human Rights Watch called it chilling, while Botsman called it a futuristic vision of Big Brother out of control. But some people in China say the social scores and the surrounding infrastructure are already making them better people. And perhaps there is more to the current government consultation on digital identity in Australia. Back in 2015, the Australian government took the first steps to develop a digital identity system after a financial inquiry highlighted the benefits of a digital identity for the economy. Since then, the Digital Transformation Agency, DTA, has developed the Australian Government Digital Identity System and the policy that sits behind it. But I suspect many will be totally unaware of the Australian Digital Identity Program. There is a website, and the current inquiry, which is running. And they say that Australians use systems to access 80 government services. And while many Australians are benefiting from more online services being provided by the government online, legislation is required to enable more state and territory services, as well as the private sector, to participate in the system. Once legislation is passed, the system will deliver a range of benefits to consumers and business users, service providers, government, and the broader economy. And they went on to say that for Australians, this means a safe, secure, and convenient way to prove who they are online, and having access to more services and businesses from the comfort of their home at a time that suits them. This legislation will ensure that Australians have access to a system governed by legislation and designed with privacy in mind that they can trust. And for businesses, the legislation means a simpler way to verify their customers. They get access to a market of identity providers certified against the accreditation scheme, giving them and their customers peace of mind. And the redress scheme in the legislation means that their customers have protections in the event of a fraud or cyber security incident. And for entities offering identity services, legislation will provide a nationally consistent set of standards they can choose to accredit themselves against and give them access to government agencies and businesses requiring identity services. And again, the liability scheme in the legislation provides clarity and certainty and rewards providers who follow the rules. And for government, the legislation will improve security and streamline processes against agencies. This will make it easier for Australians to access more government services and decrease the risk of identity fraud. And for the broader economy, a whole of economy digital identity solution has the potential, they say, to save up to $11 billion in costs in our economy of verifying identities. And identity fraud also costs Australians who fall victim approximately $900 million per year, according to the Australian Cyber Security Centre. So the current consultation is framed around three issues. Firstly, they introduced new privacy and consumer protections, including clarifying that participating, relying parties must help users seek help when affected by a cybersecurity fraud or a cybersecurity incident, for example, in addition to the assistance that must be provided by onboarded accredited participants and the oversight authority. Second, provided further clarity and certainty about which obligations apply to accredited entities onboarded to the Australian government digital identity system versus accredited entities using another digital identity system. There has been no change, however, to the principle that only entities who wish to participate are regulated by the legislation. And thirdly, introducing new restrictions regarding access to and storing of data outside of Australia. Now, in fact, you have until the 27th of October to make a submission, and I do plan to make one. But my point is this: we need to think ahead as to how digital identity, central bank digital currency, and programmable money will interact, and ask the all-important question, are we comfortable with these developments, or are we sleepwalking into an uncertain future? And we must ask who is in control and to what extent will we be able to opt out. Say the government gave you an account at the Reserve Bank for digital currency, but to access it, you needed a digital ID, and the funds were programmable. Not only would spending be tracked, but certain types of transactions could be encouraged or restricted. Combined, the government's tentacles of control would be extended and our liberties further eroded. So my worry is that we may be heading for an Aldous Huxley's Brave New World, which will be controlled by the central planners, and even as we speak, the components are being strung together. So I think it's time to have your say. And by the way, I'm not anti-digital. Of course, I think technology is an important enabler, but the way it's put together and who has accountability and who has freedom is really important. And I worry that for many people, they don't know about what's going on, and they're just assuming that the government will look after our own interests. Well, I have to tell you that in my mind, we can't make that assumption. We need to take a proactive view and become engaged around some of these important issues. Otherwise, we will suddenly find that there is a programmable currency which is being controlled by the central planners under a digital identity, and the social score will follow. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.